Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency again. So today, as usual, we have prepared the fundamental background, the current situation on the markets, not particularly in euro, but also in general what is going on in the world with this epidemic stance. And currently we see that overall the world is coming to some different stage of the survival in this in the struggle with this epidemic. So if in the first stage we were strongly focused on purely healthcare problems, medicine problems, resolving of the absolutely necessary needs for people and protection of the people, this stage is currently coming to some kind of the, well, not quite habit, but it becomes a kind of the trend that is continue to develop without our attention. So the measures in different countries already stands in, and they just continue to apply. And investors currently is coming gradually to the second stage, where it's trying to assess the result of this epidemic on the world. As first data starts to release, and now investors starts to see what could happen next. Well, currently we have too few data. So we have some initial data on the PMI, unemployment in the United States, initial claims, and the non-farm payrolls. But the data that we've got, and with the assessment of the Donald Trump of the strategy in the United States on the amount of the victims from this pandemic, well, it makes think investors that where it stands in the beginning of a really big crisis. And numbers that we see last week just confirms this idea, and investors carefully starts to follow the same trend as we discussed previously. So it's not occasional the price performance that we see on the euro currency. On Friday I said that it's really could be turning back to running in the safe haven assets. It's demand for the United States dollar. On the fundamental background today, we discovered some few moments. So first of all, the European Union can't come to agreement between the major countries. What measures should be accepted? Because Italy, Spain, that carries the major burden of the pandemic, they call for more active measures, more stimulation, more supportive measures for the business, for the people, to split the burden of this among the all union, because this is union, guys. While the German, Netherlands, and others stands a bit for a different point. So, in this situation where the neighbors can't come to agreement and unite in the face of the tragedy that stands in the country, well, that's really pity, and it makes overall situation even more sophisticated. Second, we see that this balance coming in the global economy, because China is recovering first, but European Union and the United States still stands on the peak of the pandemic. So it definitely will be some lag within the 2-3 maybe months when it will be over, and gradually and carefully the border starts to open, and global market starts to functionize again. And so what this lag between the different countries come to, what impact on the economy will be also, so this is a question. So, and second, the major question right now, or third major question, could it be some second wave of the epidemic? That's the major worry stands on the markets. That makes extremely difficult any forecasting. And we have provided some and put some views on the major analysis agencies on this problem, what they thought in the current situation. But one thing stands definite, that currently it's too early to talk about decreasing of the demand for the safe haven assets. It seems that it's not over yet. On the technical side, we also see the confirmation of that. So since not much to talk about on the daily intraday chart, because mostly we have discussed them on Friday, and they haven't changed since our Friday discussion, I would like to show you two different charts. First is the weekly chart of the euro. So recall what we discussed here. Actually, on last week we talked on two possible bullish patterns. First is the widening triangle, or we also suggested it could be diamonds, potentially bullish reversal. And inside of this diamond, we've got the huge bullish engulfing. That was the background why we thought that probably this should be upward continuation to the 1450 if market properly responds on the support levels on the daily. That was absolute condition for this situation. And as you can see, market hasn't shown any proper respect of the level. So you can see with this drop down, so it was confidence respect, no reaction on the OP and agreement, just as it now exists, and drop below. It seems that only a oversold level on the daily keeps market from the further drop. This is, of course, not the action that we could treat as a retracement inside of the body of the engulfing. This is something different. Besides, this situation in the weekly have suggested minor pullback and continuation right back up. So that should be symmetry here with this action. So market should have to reach the upper border of this consolidation, start ping-pong action inside of it, but we see early reversal and drop here. It's absolutely rational for its behavior inside of this pattern. It's mostly bearish. Besides, this drop is in excess of all support levels, also bearish. It's too deep to call it a retracement inside of the body of engulfing. And although the theoretical the pattern is still valid because lows has not been exceeded yet, it's also they stands within the daily weekly oversold level. Maybe they will not be broken just very fast. But this performance makes us think that currently it's better to stay aside from taking any long position on euro currency. Because this price action we see under cover of this action is the demand for United States dollars again. That's what we see here. Also, I would like to show you the dollar index chart. This is monthly chart, guys. And it's very similar to the monthly chart of the euro, but dollar index stands closer to the extreme point, while euro stands a bit far from them. Dollar stands almost at the same point. And here, guys, mostly the further direction will depend on reaction of the market on this area, because this is all-time confidence resistance on a dollar index chart. It's very strong level, and if market will break it up, this will be strong consequences for the further action. You could imagine what will happen and what demand for the dollar will be. Correspondingly, the reversal here to the downside, forming the bearish divergence, wash and rinse of this top, and fast reversal to the downside, maybe forming double top here, it also will lead to the serious consequences. So reaction on this level will determine the direction on all other currencies for a long perspective. That's what we're particularly watching for. The advantage to us is that this level is very strong, and definitely euro will reflect the price action behavior of dollar index around it. So it means that on the daily chart we will get some pattern probably that will give us the hint what to expect in the nearest future. But currently, as this level has not been reached yet, so market just retesting it, it's coming to it. And we see the demand for the United States dollar on the background of the bad statistics. I probably would avoid taking any long position in euro currency paper. It means that on the intraday charts, we will keep an eye on the further downward continuation as soon as market will abandon oversold condition. Probably we should be ready for a drop right back down to the 106.50, 106.80 areas of this previous lows and XOP target. So that's will be next destination. Not that we will see what will happen, because hardly market will break it level immediately very fast, because it's also weekly oversold, which is rather strong. Don't forget also, guys, that the dollar index now stands at the all-time confidence resistance. So it's also a good support market in the short term. So that's our trading plan for next week.